Welcome back. You're still watching Closing Trades right here on ET Now. Bundeep Singh Rangar, Chairman of IndusView, joins us with his perspective in the marketplace this afternoon. Bundeep, thanks very much for taking out the time. What is your assessment of how things are shaping up at this juncture, and what would you be recommending clients?
Thanks for having me. I mean, the real critical test in Europe right now is around the Greek solving of their debt crisis and the possible containment of what might otherwise be a contagion spread. And that's a critical test for Europe because some people are looking at the Greek crisis as being what the Lehman crisis was in the U.S. in 2008.
So what is the expectation over the next 3 months about how various asset classes would do, particularly equities and emerging markets, equities in specific out there?
Well, I mean, the challenge right now is that, unlike the past where the emerging markets were a strong growth story, the emerging markets themselves, including China, are not seeing the same robust level of growth that you've seen in the past. I mean, India's growth has slowed down, as you know, to 7.7%. The Reserve Bank of India has increased rates, and that obviously, while hitting inflation, also crimped growth. And the Chinese aren't that keen to buy out either U.S. debt or European debt in the same way as the past because there's less faith in the system. So the emerging market story, which was in the past seen as a way to get better returns, even if seen as somewhat riskier, are now not in the same kind of limelight as a way to get away from slowing down European and American economies because the emerging markets themselves are somewhat impacted by the overall crisis.
Bundeep, afternoon, Neeraj here. Just a follow-up to that. If you scan the scenario, there are a lot of people talking about how there is opportunity in some pain, and broader themes include non-defensives, risky assets which have been plummeted for a while now, and there could show a bit of a bounce back. Would you think that this is the right time to even think of playing such a trade because of, just so much of uncertainty around?
For a speculative investor with a big appetite, certainly there's, undervalued assets. I think for some M&A deals, certain acquisitions in Europe are certainly attractive, and you can see even the Qatar Investment Authority making moves right now. There's talk about involving EADS. But by and large, investors are seeking the flight to safety, and you see that from whether it's investment in gold, whether it's, until recently the Swiss franc, and certainly in domestic situations like in India, I expect things like land, which are generally seen to be safer, real estate for that matter, to become avenues for safe havens for investors. There's just too much risk in the market and too much uncertainty, partly because of the economic situation, partly because there's no clear political leadership to tackle these issues. Every political leader has a political fallout when it comes to taking the hard decision, whether it's in Greece. Angela Merkel has a political cost to pay for that with her votes. You've seen that in the recent elections. Sarkozy has the same in France, given the French bank's exposure to Greece. And you see a bit of that lack of leadership also, of course, having played into the downgrade in the U.S., where I think the overall sense is play safe and not go too speculative or risky, just given the uncertainty in the market.
All right, leave it at that, Bundeep. Thanks so much for joining us today and giving us that perspective. That's a quick view from Bundeep Singh Rangar on his view of the emerging market situation. A few stocks need to be pointed out. Jubilant Foodworks, a sell recommendation from Mitesh is now at 888, 3 fat ladies. That one has not done too well in trade. Pantaloon Retail should also come up on your screen. It hasn't had a really good session in the last half an hour, 45 minutes of trade. Remember, a sell recommendation from Ashwini Gujral. And the intraday should be very interesting, 5.5% lower as we speak.